Hey, today we are going to talk about accounting, and we are going to start at a very high level, and we're going to demystify some of the things that you might find confusing or irrelevant even, or intimidating. Um, and I'm going to start off by first outlining the main types of documents that you receive in your financial statement package. Okay, so financial statements refers to mainly three documents: a balance sheet, an income statement, and a statement of cash flows or cash flow statement. Oh, an income statement can also be like a profit and loss, or it's got a few different names, but balance sheet is generally a balance sheet. Cash flow is generally cash flow. Income statement can have all types of different names. Statement of profits, profit and loss. Um, and I first want to start off by telling you that not understanding accounting or thinking you're bad at numbers um, is perpetuated by these massive worksheets, and numbers can be intimidating even when in reality all of it is relative. In fact, that balance sheet in and of itself is meaningless. An income statement in and of itself is meaningless for two reasons. One, information in a vacuum is useless. Everything is relative. And two, a massive document full of numbers, when you are more of a visual person, is really kind of useless. Let me give you an example. Take a look here at this screen. So assets, say this right here, this is the part that we're going to concentrate on. There are three parts of a balance sheet: assets, liabilities, and equity. There are three parts to an income statement: revenue, expenses, and profit. These numbers here, they all have the same amount of assets. They all have the same amount of revenue. Useless. Completely and utterly useless. Even if we have the information that the liabilities were in this scenario, call this scenario A, scenario B, and scenario C. Okay. They all have the same amount of assets. Their liabilities go up, meaning their equity goes down, and we'll get to that in a little bit. Their revenue is the same across. Their expenses, small, big, huge expenses, and the profit. Now, even with this information, we might look at this equity and go, that's awesome, or this profit and go, woohoo, or this loss and go, ooh, buddy, or this equity and go, ouch. But we don't know anything about these businesses. We don't know. We don't know. This revenue, the expenses in this revenue, there might be a massive one-time expense that actually is going to make this revenue be $2 million with very tiny expenses for the next 2 years. We don't know. Even beyond that, just looking at numbers like this is like, so what's it mean? Well, that's what we're going to get into. For now, I just want you to understand that accounting is relative. Your numbers in your business that you run them by are relative. And we are going to learn how to find those relationships between all of these different numbers and all of these different ratios to figure out how the best way is to see the light in your business, to see where those wins are in your business so that you can grow your profits and grow your lifestyle and grow your personal wealth and change the world ultimately, right? That's what we as entrepreneurs want to do. We want to change the world. And the only way to do that is to have a healthy, sustainable business, to learn everything that you can while you're running your business so that if it doesn't work out, you can use that knowledge to be better the next time and better the next time and better the next time, right? And finally, to create that personal wealth for yourself and for your family, to create the lifestyle and the change in the world that you want to. Okay, so accounting is relative. That's the lesson for today. Accounting is relative. Next time, we're going to be talking about the balance sheet. Okay? Quick video on the structure of a balance sheet. Okay. Now, today I want start off with the bang. Let's talk accounting, shall we? Okay. Okay. Ugh.